Hey, everyone. This is an update to the indicator I've been working on. You might have seen an earlier version of it that I shared in Discord the other day. This is called Bollock bands. It's based on Bollinger bands, but I called it Bollock bands because I'm very immature and it just amuses me, especially because we have settings that are all about like overriding Bollock band settings. I just think that's funny. Custom Bollock settings. I don't know. Maybe it's just me. So yeah, this indicator is basically two kind of indicators or two signals in one, and it's designed it's designed in a way that you should use them both at the same time. When you see both of the signals saying one thing, then a stronger uh, likelihood that it's going to do what you think it's going to do or what it's telling you to do. Um, just to mention the background of why I've done this. So some of you might remember that I created this spreadsheet earlier in the year, the ascending range model. And basically, the idea is you trade within this like static ascending range. And it's great. It works really well, right? Every time it recommends to do something, and I kind of ignore it, and I always regret it. But obviously, at some point, it's going to stop working. It's going to go outside the range, either to the top or the bottom. Hard to say which way it's going to fail, but at some point it will fail. So I'm just building, and also this is only by the time it gets to the end of the year, it's going to stop working because I've built this purely for 2024 and 2025. So this indicator kind of solves a couple of those problems because you get the same kind of range, but the range adapts to what the price action is doing. And it also works on other pairs and other assets, obviously. And so yeah, these bands are based on Fibonacci's. And the idea is, if you haven't seen the spreadsheet that I should just showed you, is that when you're at the top of the range, you're 100% Tesla, 0% MicroStrategy. When you're bottom of the range, you're 0% Tesla, 100% MicroStrategy. And then as you go up and down the range, the percentages change, and it basically balances risk versus reward. And when you're in the middle, you don't know where it's going to go, so you want to be 50-50. So that's that there. That's that label there. These labels they aren't doing anything to do with the logic. They just purely, you can think of this as just basically like reminders or notes on the side of the chart. And if you double click or if you go into the settings, you can change what that text says to whatever you want. I mean, I put 100% because I'm talking about a trading bag here. I'm not talking about my entire bag. So yeah, you can put whatever you want in there just to make it clearer. Um, so yeah, back to what this is. This is two indicators or two signals in one. The first one, as I said, is these Bollock bands or Bollinger bands, and it's based very heavily on IA confluence model. So if you remember the confluence model, it's got three settings. It's got bullish, neutral, bearish. So if you can play with this, set this to bullish. If you're very bullish MicroStrategy, you set this to bullish, and that means that you're getting out of you're staying in MicroStrategy longer because it's basically the top of the Bollock band is higher. And if you're bullish MicroStrategy or bearish MicroStrategy, if you're bullish Tesla and bearish MicroStrategy, you would choose this, and that moves the whole thing down. So you get out of MicroStrategy once the ratio gets not that high, and then all that you miss out on all this. And then neutral is somewhere in between, kind of gives you a nice happy medium. But unlike IA confluence, if you set this to double, you get the bullish and the bearish lines without having to load two indicators. So it's just a nice shortcut for not having to do that workaround. So yeah, I quite like double. It works pretty well for MicroStrategy and Tesla, especially on the 2 hour. But if you don't like Fibonacci, you can switch that off. So if you want, you can just switch that to split half, and that basically gives you two halves. So you could just basically say red is I want to be heavy Tesla, and green I want to be heavy on MicroStrategy. And then if you're in the middle, just don't do anything. Anyway, I like Fibonacci. I'll switch that back. So yeah, that's the first indicator. That's the first indicator tells you, when you're higher up, tells you swap one way. When you're lower down, swap another way. But also if you're somewhere, in the top half, but not quite the top, it will tell you roughly, how many shares to swap. Okay, so that's the first part of it. Second part is this green and red line that's going through the middle of the chart, and you can think of this as a kind of a trend line, but it's pretty snappy. It changes it changes color very, very quickly, and there isn't too much noise. So especially on the 2 hour, so it works pretty well. Especially if you're this is more a trading indicator for doing 2 to 4 trades a month. So you're swapping, tops and bottoms. You're not trading up in and out like twice a week. There's other indicators that are better, much better for that. But this one's great for if you want to just do a couple 2 to 4 trades a month, I would say. So yeah, the green and red line. Green line means the chart's going up. Red line means the chart's going down. The way that I would use this is I would wait for the line to change color, and then as soon as the line changes color, you then wait for the candle to close. So you wouldn't be able to trade this candle because it's not formed yet. So once it's closed, you wait for this one to open. So this is a bearish candle. So you would trade at the start, which is the top of that candle. So that'd be 1.27 on the 10th of June, excuse me. And then you wait for the chart to go green, and you would swap back here up to 1.09. So basically from 24th of June to 9th of June, so it's like 2 weeks, you get about 0.16 ratio interval, which is pretty decent, especially if you're doing a big swap. So that gives you, and you can see here all these stars. These are the big moments where it was time to swap. You might have noticed that there is moments where momentary there are momentary moments. Sorry, that's a bad way to explain it, but there are moments where the line switches, green, red, green. So the good ones, the easy ones to deal with are where it only does it for one candle. So I think you might have seen it here. Where was it? Yeah, I think it was here. So what I would do is it goes from red to green. So I would swap from red to green, and then it goes back to red again. So usually when that happens, I mean, I would just swap back again to do the swaps as it says. And then when it goes, and the reason for that is because you're in this band here, the second highest band. So the candles or the candle hasn't moved too much. So even if you do these swaps, I mean, you're not going to really change your ratio of MicroStrategy and Tesla too much, right? It's basically in the same area. So why, you're not basically when you see these things where it's like changing backwards and forwards, it seems like a bit confusing, but basically you don't really need to do much. You just swap according to there, and then when it happens again, swap again, but you just base it on these amounts here or whatever you decide. So you actually end up doing you don't end up doing anything. So you basically do one swap here, and then you don't have to do anything for this one because you're already at the right ratio. And then when it goes back to green again, you've basically already done the swap here, and this one's kind of cancelled out. If you see moments here like this one where it's not one candle, it's quite a long period of time where it's going red to green. Well, I mean, let's start from the top. So here you swapped, near the top, and you switch from MicroStrategy to Tesla, because you're at the top of your MicroStrategy is expensive relative to Tesla. So you swap here at 1.27, and you come all the way down to here, and at 1.16, so that's 0.10-ish in 10 days. No, about a week. So you get 0.10 interval in a week. But because it's in the middle, it's literally on the line for the middle of the range, you wouldn't swap, heavily. You'd swap to 50-50. And so you're basically you're sealing in half of the profit or half of the trade that you did here. You're taking half the profits here. And then when it goes to green, you're not sure which way it's going to go because you're in the middle. So then when it goes back to here, well, again, it's in the middle. So you're not going to do anything. You'll just keep it at 50%. And that way you're hedging your bets. It could go either way. And in the end, it does. I mean, you can see it did start going up. So you might have thought, oh, it was better to go back into MicroStrategy because you think the ratio is going up. But in the end, it didn't. It went down again. So, going 50, basically when you're getting swaps in the middle of the chart, it's very wise to I would say, follow these bands and allocate your portfolio according to that risk reward, those risk reward percentages. Being 50-50 here is not a bad place to be. It works it out for you, these different bands. So yeah, it's what you swap here. You swap again here, but nothing happens because you're already at the right allocation. And in the end, it goes down here, and then you secure the second half of the tranche. So that you basically what you started here, you finish it here with the halfway point here where you locked in half of the profit. Yeah, hopefully that makes sense. I mean, I'm not sure if this like is the bet is a really great strategy, but it's the one that I've kind of been using for a few years now, but just haven't had a particularly good like framework or model for it. The spreadsheet and the website that I made kind of does some of this stuff, but having this in a trading view indicator, and if you just if you look at if you go back and look at all these stars, it does a good job of getting like the main big movements when these lines change color. If you just follow these lines and then use these bands to determine the swap size, that you're probably going to do all right. And also, here's a good example of what could happen. So here you're quite near the bottom, not that near the bottom, but you swap here. And then if you weren't using the green line, if you were using the Bollock bands or the Bollinger bands to determine when to swap and it hits the top of the band, you might think to swap here, but then you're going to miss out on all this move. So you need the confluence between the two. Um, and again here, like if you just use the green and red line, for example, here, but you don't use these Bollinger Bands to determine the swap size, then here you're going to swap the wrong amount. You don't know where you are in the range. So you need these two things working together to determine when to swap and how much to swap. That's in a nutshell. I probably could have made this video about 1 minute long if I just said that at the beginning. Anyway, hopefully this is helpful. I'm liking this indicator. It's not my work. I've just combined two indicators together and tuned it a little bit to match to match this pair. Um, but yeah, I mean, what's this? This is back in end of 2024. Let's see how it would have done here. This is a good move, right? So we start off here and we do hit the top of the thing, but we don't swap. We're still in the green here. So now here it does go red. So we would swap, we would do the swap. But it goes back to green again. And because we're at the top, we need to allocate accordingly, according to those percentages, right? So we should benefit from most of this move. If it had gone red and dropped right down, and then we swapped here, and then it gone back up again without the line changing, then we would have been in trouble. But because the line changed all within one band, it basically keeps us in the right percentage and in the right asset. So yeah, hopefully that helps. I haven't back tested. This is quite hard to back test because you actually need to make some decisions. I mean, it's not it's not automatable as far as I can tell. Maybe Simi or someone cleverer than me can figure out how to back test this automatically. But visually, it looks pretty good to me. So I'm keen to get everyone's thoughts. Anyway, I've rambled on enough. Thanks everyone, and talk to you soon.